Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 11th of May. Today, it's Super Thursday in the UK. That means that besides the Bank of England rate decision and the meeting minutes, we also get the quarterly inflation report, which Governor Carney will present at a press conference after the gathering. The Bank of England added a hawkish touch the last time it met, indicating that some members would consider a reduction in stimulus should there be any further upside news on the prospects for growth or inflation. On top of that, Christine Forbes dissented the decision to remain on hold, favoring an immediate rate hike instead. Since that gathering, data showed that the core CPI rate rose further, but GDP growth slowed significantly in the first quarter. Therefore, we think that the Bank of England is likely to stand pat, erase the hawkish touch it added the last time, and reiterate that policy can respond in both directions. We believe that policymakers will place more emphasis on supporting economic growth and repeat that above target inflation entirely reflects the drop in sterling and is thus transitory. As such, although Forbes is likely to dissent again, the overall tone of the committee may be somewhat more concerned than previously. In this case, sterling could reverse some of its latest gains. In addition, there is a prospect for the GDP forecasts to be revised lower. GBP USD has been trading in a consolidative manner recently, staying between the support of 129 and the psychological round figure of 130. A cautious committee today may be an excuse for some profit taking on existing long positions, which could cause the rate to correct lower. We believe that a dip below 129 may open the door for a test near the key zone of 128.50. Nevertheless, we still see an uptrend on the 4-hour chart, and as such we would treat such a slide as a corrective setback. The key risk to our view for a pullback is the prospect that more than one MPC members vote for a rate hike. Something like that could indicate that there is increasing support among the committee for such action, thereby raising speculation for a rate hike in coming meetings. In such a case, GBP USD could surge, break above the psychological level of 130, and perhaps aim for the next resistance of 130.50. Now, overnight, the RBNZ kept its policy rate unchanged, but did not communicate a more optimistic bias as many market participants may have anticipated. The statement accompanying the decision made it clear that although domestic economic data are improving, some of the progress is transitory, particularly in the inflation outlook. With regards to the Kiwi, the bank noted that its 5% decline since February is encouraging and, if sustained, will help to rebalance the growth outlook. Perhaps most importantly, policymakers kept the door for further easing wide open, indicating that numerous uncertainties remain and that policy may need to adjust accordingly. Given that this may have come as a surprise to New Zealand dollar traders, the Kiwi plunged. We think that the currency could remain under pressure for a while, perhaps until the recent concerns regarding a slowdown in Chinese growth ease a little bit. Kiwi dollar traded higher heading into the meeting to hit resistance marginally above the 0.6940 barrier just a few hours before the decision. At the time of the decision, though, given the disappointing dawn of the RBNZ, the pair plunged and broke below the 0.6880 level. For now, we believe that the pair may correct some of that steep fall and perhaps test the 0.6880 territory as a resistance this time. If the bears manage to take advantage of such a corrective rebound, we would expect them to aim for another test near 0.6840, where a decisive dip may pave the way for the 0.6780 support area. As for the rest of today's highlights, during the European day, Sweden's CPI data for April are due out. The forecast is for both the headline and underlying inflation rates to have moved higher, which could reverse some of SEC's latest losses. As for the UK economic data, we get the trade balance and industrial production for March. but these are likely to be overshadowed by the Bank of England meeting. From the US, we get PPI data for April and the initial jobless claims for the week ended on the 5th of May. Besides Bank of England Governor Carney, we have 3 more speakers on the agenda. From the ECB, we will hear from Vice President Vítor Constâncio and Executive Board Member Peter Praet. In the US, comments from the influential New York Fed President William Dudley will be in focus. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.